Now, on crypto, I think we're in the middle of one of the great short squeezes of all time. And it's not just crypto, it's everywhere.
Hey guys, welcome back to the channel. Today we have Mark Yusko giving us his prediction for Bitcoin in 2023 and why he believes the crypto market is currently experiencing one of the great short squeezes of all time. Yusko believes that because Bitcoin and other cryptocurrencies are seeing significant gains, he anticipates the market will continue to grow with a significant rally as soon as the second quarter of 2023. He also points out that the current recession we're in is very similar to the 2001 recession when markets crashed and sentiment turned sour right before a major rebound took place. Yusko believes the next Bitcoin halving will be the main catalyst that sparks a new crypto rally, and if there's a zero added onto the price of Bitcoin every 4 years, that means the potential for new all-time highs this year is a very strong probability, leading up to Mark's $100,000 Bitcoin prediction at the beginning of 2024. Let's check out the latest interview with Mark Yusko as he gives us his take on where Bitcoin and the crypto market is headed in 2023. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
We're going to add a zero. I think we're going to 10x the market cap, and we're going to back to that 3 trillion level, and we're going to, not back to, we're going to the 3 trillion level. And I think that's coming. And it doesn't have to come tomorrow, and it doesn't even have to come next month or even by April, May. I think it's, Q1, Q2 of next year. So a couple things. So on the macro side, I don't think we're out of the woods. I don't think we're on the precipice of some calamity either. I've said for probably the last year that this recession, and I actually believe we're in the recession, right? I think they'll call it retrospectively. They'll say it probably started, March, April last year, and we're probably closer to the end than we are to the beginning. But it's a shallow recession, very similar in my mind to the 01 recession, right? 01 didn't even really feel like a recession. So it's going to feel not very good. You throw on top of that the Fed continuing to tighten. Everybody says, oh, they're pivoting. Well, they haven't pivoted yet. They slowed the pace of tightening from 75 to 50. And now people are saying, oh, it's going to be 25 this month. Maybe. We'll see. But even that is still hiking. That's not cutting. And so I think the macro is still a headwind, is that. Now on crypto, I think we're in the middle of one of the great short squeezes of all time. And it's not just crypto, it's everywhere, right? If you look at this month, right, the first 3 weeks of January, the company, and use a technical term, the company, the more money they lose, the worse the business, the more it's up. Peloton, Zoom, GameStop, AMC, 60, 70, 80% this month. Forget, over any meaningful period of time. And we're talking 3 weeks. Now, the problem is, when you're down 95% and then you rally 80%, you're still down, in the 90s. So it's not really that good. But there's a interesting thing going on this year, Paul, that hasn't happened for a long time. So years ago, there used to be something called the January effect, where people would sell their losers in December for the tax loss. They had to wait 30 days to buy them back. So in January, all the stuff that was horrible the year before did really, really well. And it was known as the January effect. And it was really small cap and micro cap names by and large. And that's where the excess returns for the year came from. Well, they changed the tax laws a number of years ago that made mutual funds sell by October 31st, not December 31st. And so the January effect got shifted to November. So if you look in the middle of November, just about every year, you have this 2-3 week period where the companies, right, the things that were just horrible all year did really well. And you didn't get the January effect. Well, this year, last year was so bad. Like everything was down. Stocks were down, bonds were down, small cap, large cap, international, emerging markets, everything was down, crypto. So the regular folks actually did some tax loss selling. So those tax loss sales were of the horrible companies like Peloton and Zoom and AMC.
Right.
And they now are rallying in a huge short squeeze. And Bitcoin, I think I have this right. Binance just had over a $500 million collapse of shorts on their platform. So we are way oversold. I'm sorry, way overbought. We are as overbought as I've ever seen Bitcoin. So I still believe we're in crypto spring. Crypto winter's over. We got through Hurricane Sam, which I didn't anticipate. And that's where we went. We were at kind of 18,000, and that's what I thought was the bottom. And then we had Hurricane Sam that took us down to 15. And now, we got back to 18. That to me is spring. Spring is choppy, ugly, not really up and to the right. Up and to the right is summer. Summer's still 3, 4, 5 months off in anticipation of the halving. There are a lot of people saying we're going to be new all-time highs this year. Possible.
That's interesting.
Definitely likely in early 24. Here's an interesting stat. Every halving adds a zero, meaning it increases the market cap of the Bitcoin asset by tenfold. So we went from 1 to 10 in the first halving. Then we went from 10 to 100, from 100 to 1,000, went to 10,000 in the last one. And I think, January, February next year, we go to the 100K. And we'll surpass that, because then the next one after that, brace yourselves, right, is 1 million 4 years later in 2028. People say that could never happen. No, it will happen. It's just going to take time. I think we'll have a retracement, a pullback. I think it's still positive, and short of a liquidation of GBTC, I think we are in the beginnings of the accumulation phase again. In the 4-year cycle, we have crypto winter, spring, summer, and fall. We were in winter, now we're in spring. Summer's still coming. And summer is when you get the big parabolic move, and then fall, you get the kind of consolidation and heading back into winter. So I think all that is good. The one thing that I do struggle a little bit with is the technicals versus the fundamentals. So a lot of people are looking at technicals, and yeah, the technicals look good. You got a rising, 50-day breaking through the declining 200-day. That's a big positive. We got a momentum thrust out of the bottom, but that oversold RSI is troubling, right? Our thing about RSI, it doesn't have any plateaus, right? Never, ever, ever does it go up into the 70s and stay there. It goes up higher than you think, and then it goes back down. It's a oscillating pattern for a reason.
With the macroeconomic environment still being a headwind, Mark believes that Bitcoin is not at the bottom. He compares Bitcoin's future as the blockchain equivalent of Amazon, which at one point fell 95%. If Bitcoin gets written down, it's hard to tell if it's worthwhile to dump that position to buy lower. He doesn't recommend exiting the market because a bull run might immediately start, and the risk of investors missing out on profit is too high. Yusko also sees that the current pattern for Bitcoin is very bearish, and that it has the ability to go down significantly in the next 30 days. What do you guys think about Mark Yusko's prediction for Bitcoin, and where the crypto market is headed in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.